The New York chapter is very lucky to partner with CohnReznick, which sponsors and gives us space for our monthly business meetings. CohnReznick is a national accounting firm serving organizations around the world through its global subsidiaries and membership in Nexia International. Rocco Marotti is our direct contact and an ex officio member of our group. He is the head of the law firm industry group at CohnReznick, has an in-depth knowledge of law firm management and the tax issues of practices and individuals. And he also has a subspecialty in employee benefit plans. Just before the first round of PPP loans, we asked him, or he was asked by Kevin and Lou, to give a few-minute presentation on PPP loans, and that was the entire meeting. He was just peppered with questions. Everybody wants to know about it. So we thought it would be helpful for all of us to hear from him again before the second round. And with that, I turn it over to Rocco. Thank you.
Thank you, Jane. Greatly appreciate. Good afternoon, everybody. Hope everybody is doing well. Had some vaccine discussions today, so that's all good. As Jane said, this has been a continuing agenda item for me since this all came out in April. I am part of our firm's SBA task force that is up to date on these rules, regulations. We've been helping clients, make sure that they're applying the right way first time around. Until December 27th, I was working with a lot of firms on forgiveness applications, and now we have PPP round 2. So I think we have a small enough group where I wouldn't mind taking questions as we go along, as I'm going over some stuff. Obviously, at the end of it, if there's anything I said that we need to go over or discuss, I'd be more than happy to. And then at some point, I will type in my email address in the chat section. So if anybody does have any questions after the fact, please feel free to reach out to me, and I'll be able to get back to you on certain things. So with that being said, as just an overview to the PPP program, obviously this was, established, second quarter of 2020 to help struggling, supposed to be small businesses, with the effect of the pandemic. Fully funded loans that went through, local lending institutions where the loans were guaranteed 100%, no collateral was needed on the loans, no personal guarantees, it was an interest rate of 1%. And initially it was, if they were going to be repaid, it would be repaid over a 2-year period, which ultimately for PPP round 1 was changed to a 5-year period. And all of that was obviously prior to forgiveness. Back then, the loan calculation was based on 2.5 months worked, 2.5 months of payroll calculations based on certain timing requirements, which I'm assuming everybody here, if needed, has already probably applied for round 1 and so forth. So I won't go too much into that because round 2 is much easier to calculate. And, in coming up with those loan amounts, you had, the main thing was payroll costs. And what came up of payroll costs? That was mainly, obviously, people's salary, state employer taxes, health benefits, and retirement benefits. That was the main calculus of the payroll costs. Then there was obviously rental expense on any operating leases. Initially, everybody thought it was maybe just office leases that were covered. And then the SBA came out with further guidance that it was any operating lease. So whether it was with the group in front of me, it was operating equipment leases, copiers, fax machines, anything like that, furniture leases. It was any operating leases, utilities, which wound up being telephone, in internet, electricity, all that type of stuff, and so forth. And then, obviously you calculated it, you got the money from the bank. And initially it was you needed to use that money in an 8-week period, which caused a lot of problems, because people were getting realistically 10 and a half weeks worth of loan proceeds and were expected to use it in 8 weeks. And then they came out with a revision to the program where they extended the use of the money, which they call the covered period, to 24 weeks, which ultimately for the people that I'm presenting to now probably were able to use all of that money and in excess. So with that being said, now they come up with round 2, which came into law on December 27th. Took them a couple of days to come out with some final regulations. And for all intents and purposes, it's pretty much the same program where a lot of the businesses are going to ask for roughly the same amount of money, but they threw in 2 big changes. The first one being, and again, I'm a little prejudiced because I know a lot of the firms in the New York Association than anybody else, is they went from having the maximum amount of employees from 500 down to 300. That was one of the big ones. And then the other one, in order to get round 2, is you needed to have a revenue decrease of 25%. And that's really how they kind of weeded out the bad people that took money in round 1 that probably shouldn't have, and, obviously had better years than not. And that's really how they're going to get the people that need the money the best. Now, there's been some back and forth as to how the 25% decrease is calculated. So I want to go over that because that's kind of important. For clients that have the ability to prepare what I'll call internal financial statements, it's a 25% reduction in revenue for any quarter over quarter, 2019 versus 2020. So what do I mean by that? What you would normally do is look at each of the 4 quarters for 2019 and then compare them to each of the 4 quarters in 2020. If any one quarter is below or your revenue decreased by more than 25%, you would qualify for a round 2 loan. So if, for example, your first quarter revenue, if it actually increased, let's say by 10%, and this is where I'm seeing a lot of businesses come into play. Let's say your second quarter revenue decreased by 35%, and your third and fourth quarter revenues increased by 5% each. Because that second quarter decrease was more than 25%, you would qualify for a round 2 loan. Then they gave the option for really small businesses and maybe, Schedule C filers, where if you don't have the ability to produce an internal financial statement, they make the assumption is that if your revenue for the year decreased by 25%, they make the assumption that then at least one of your quarters revenue had to decrease by 25%, and all you would have to do is produce a tax return showing that decrease. Okay, now the concern that's happening with that is, well, wait a minute, it's January, my tax return for 2020 is not done yet. Right. The new PPP round does run through March 31st. So where last year, for round 1, you could request a loan up to, I believe it was June 30th. Now you have until March 31st of 2021 to request a round 2 loan. Okay. So with that being said, I've covered employees, round 1 loan. And the only other requirement is that if you're asking for a round 2 loan, you had to, and this is important because there is a differential, use all of the round 1 loan proceeds. You didn't have to ask for forgiveness yet, but you had to verify that you're going to have to verify that you used all of round 1 first. So that's very important because there was some confusions and some banks are even confused over it. We know a bank in the Midwest that basically shut down their PPP portal because they had it in there that they believe you needed to ask for forgiveness, and that's not the case. You only have to use the money from round 1 in order to get round 2 money. The biggest part of round 2, and it's really the industry that round 2 is really probably more geared towards, is the hospitality industry. And it's for businesses that have that NAICS code of 72. They're actually able to ask for more money, and some of the rules have changed with that, where I could talk for a whole hour just on that, but we could always, if anybody has hospitality clients that need help or anything, we could always discuss that offline and so forth. And then for round 2, the maximum amount of the loan is $2 million, where in round 1 it was $10 million. So that changed a lot. And again, my assumption based on knowing, a lot of firms that are in this group, that may not impact, a lot of that firms in asking for that type of money. So with that being said, some of the other items that have changed for round 2 is what are eligible payroll costs. So they've increased the definition of that for round 2. So eligible payroll costs represents obviously compensation as it was in the first round. Payments for vacation, parental, family, medical, or sick leave, any allowances for dismissal or separation, payments for group health benefits, including insurance premiums. And the act, it also clarifies that other employer-provided group insurance benefits, such as life, vision, dental, and disability insurance premiums, are now included in the payroll costs. Obviously, the employer portion of retirement benefits, including defined benefit and contribution plans, are included, and payment of state and local taxes on employee compensation are included in there. So, that's where they've expanded the payroll costs. Now, I've got a question here. To be clear, okay, so the first one's from Jane. Does a 25% decrease include money received from round 1? It does not. All right, they specifically stated that if you have that loan forgiven, which, initially when you get the loan, we'll go over a little accounting 101. When you originally got the PPP funds, you should have debited cash and credited a liability. Then with that being said, then what happens is, you file for forgiveness. Once you get the okay from the SBA that the loan's forgiven, you'd obviously get rid of the liability and move it into the income statement as income. In the new act, they specifically stated that forgiveness income is not included as revenue. So you do not take that into effect, because obviously that would probably have a big impact on a lot of businesses. So that's specific to that one. Then we have another question here. To be clear, we need to compare quarter 1 of 19 to quarter one of 2000. That is, you can't mix quarters. Correct. It's quarter over quarter. So you can't say, well, I'm comparing quarter three of 2020 to quarter one of 2019. You can't do that. You're comparing each quarter year over year. So I hope that helps. And then there's another question. I am interested in hearing about reopening PPP Loan 1 to add health insurance and partners comp funds to the loan. What are the pros and cons if first loan is already forgiven? That's a good question. That I don't, the last sentence in there, I'm not, that throws another kink into it. Kristen, I'd probably have to come back to you on that one. I don't know, being that the loan is forgiven. If the loan is still open, you could go back, because a lot of partners decided that, they didn't want the hassle of having to worry about their compensation being included in it, because based on the guidance, if you're a partner in a partnership requesting a loan, you're only entitled to $20,000. It's $20,000, like they're $183. And a lot of partners felt, you know what, I don't even want to bother with me. It's just, let me get all my employees paid and I'll worry about that. So there have been some pros and cons about that. It's really been on an individual by individual firm basis. It's really basically what you think your firm's cash flow needs are. And if you think you need the money, you're entitled to it. You are definitely entitled to it. And you are maxed out at a certain level, unlike your regular, let's say, highly compensated employees, where their maximum amount is $46,100 and change. You're only, as a partner, you're only at $20,000. When appropriate, can you discuss whether firms generally should be asking for round one forgiveness now, or whether they should wait for more regs? Is there any concern that the program will run out of money again? I don't believe that the program will run out of money again. I think if they come close, they'll fund more. Again, I think the way they've established the program, it's going to exclude a lot of businesses right now because of that revenue reduction, the employee threshold. Like I said, I believe that the reason they did this was more for the restaurants, the hotels that were still having problems opening up, whether it was inside, outside. I live in New Jersey. We're still confined to 25% indoor dining. Today it's like 20 degrees out, so not a lot of people are eating outside. So, in my state, the restaurant, group is getting killed here. So I don't believe. As far as when you apply for forgiveness, that's strictly up to you. I think what a lot of entities were waiting for was, until this act came out, there was always rumors of automatic forgiveness for balances $150,000 or less. But we really never saw anything, or, it was always we were hoping when we were hoping. With that being said, the SBA has now come out with what's basically a one-page certification with no numbers on it as to that loan forgiveness for the balances under $150,000. And if I can do it fairly quickly and not, slow this process down. Yes. Okay. So let me see if I can do this right and share screen. And I want everybody to see this. Share. So everybody right now, if you don't let me know, it's a loan forgiveness application for PPP loans of $150,000 or less, which I'm looking at right here. And as you could see, they're basically asking for business, all the business information that you would have to do. whether you're asking whether it's a first loan or second loan forgiveness application. Basically just employee numbers. All of this is just standard information. That's very easy. How much did you spend on payroll costs? Because again, you do have to follow the 60% threshold, but then it's just certifying to a lot of the information. Okay? 2 certifications you have to do, and then you basically sign it. And then this is a demographic thing, which they have. If anybody wants, it's either on the SBA website, or if in the chat you want, send me your email address, or when I provide my email address to you, send it, and I could send you a copy of this. Like I said, this is not proprietary. This comes right off of the SBA's website and so forth. And again, filing for forgiveness is strictly up to you. I've had 6 clients already ask for forgiveness and receive forgiveness. Some of them, it took the whole 150 days because banks have 60 days to approve your forgiveness, and the SBA has 90 days. So, I say this, jokingly, my very first law firm that filed for forgiveness, he wanted to do it right away. And he got, I hate to say, completely harassed by the SBA. It was a $250,000 loan. They asked for birth certificates from his firstborn. I don't know why. Maybe it was just the first one, but they just nickeled and dimed him for every piece of information. Then, as the process went along, I had one firm, took 45 days from beginning to end. They filed on October 1st, and they were 45 days later, they got approval from everybody. So it's strictly potluck. The SBA does have the right to audit any balance, even though everybody's heard of that $2 million balance. The SBA does have the right to, under Act of Congress, audit any PPP loan if they feel there's any impropriety in regards to that loan. But asking for forgiveness is at any given time. I mean, the one thing we were always concerned with, and I can only speak to federal and New York right now, is that the one thing that a lot of people were worried about was the PPP expenses that were paid with the loan. For federal purposes, and I know 100% sure for New York purposes, are deductible. That was a big issue towards the end of 2020, and I know New Jersey, the state I'm in, they're still up in the air on it. There hasn't been any authoritative guidance yet, but that was a concern. And some people had a concern whether or not they should file for that point. But at this point, it's all administrative. If you want to get the headache of it, and you just want to get it forgiven, there's no reason not to file for forgiveness, when you want. I think there's that. Going back to reopening, I did that one. And then some of my entertainment clients are struggling on whether to apply for PPP2 or Save Our Stages grants. You cannot apply for both. Any insights? I do not know about these Save Our Stages grants. So I do not want to give any opinion on that whatsoever. I can, if you want, this is to Seth, I can check on that for you, but again, I'm just a PPP guy right now. So with that being said, then I lost track of where I'm at. Okay. So one of the other big things that changed for PPP round 2 is what you can spend the money on now. And, these eligible, what they call eligible non-payroll costs. And that changed a lot. So obviously it's still rent, utilities, and mortgage interest. And again, these obligations needed to be in effect as of September 15th, 2020, when all of this stuff happened. But this new act expands what some of these loan costs, with these loans you could spend money on. So the new costs are covered supplier costs, which, you needed to do because of the pandemic, covered workers protection expenditures, related to obviously the COVID, such as ventilating systems, physical barriers, drive-through facilities, and so forth. Any property damage from public disturbances in 2020 not covered by insurance. And, it says covered operating expenditures, including costs for processing payroll, sales, billing software, and so forth. But all of these costs had to be in place by February 15th in order for this to happen. So again, that expands what you can use some of this money on and so forth from there. So again, it's a little bit of an easier process this time, because when calculating your payroll costs, you can use either the calendar 19 payroll or calendar 2020 payroll. And why I say that I believe it's easier is because I feel that 2019 payroll for